To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're with me, Abha Bakaya, here on Know Your Company. And today we're actually speaking to the management of a very exciting brand, a new listing on the stock exchange, Metro Brands. You've all probably been familiar with the name over many years, and it's recently gone public. Nissan Joseph, the CEO, joining us to discuss earnings, recent announcements, and lots more. Mr. Joseph, thanks so much for being with us. Markets at the time that you listed were still turning a little bit cautious on some of the newer entrants, but you've actually shown one of your best quarters yet. Do you feel that this is perhaps the impetus that markets need, or public investors need, to kind of see the potential that Metro Brands has when it comes to its growth journey?
Sure. So I think the best way to answer that would be if you looked at our 10-year CAGR, Abha, right? Yeah. So we're not looking at a flash of moment in time, or we're not looking at a spec that's happening out there. So if you look at our 10-year CAGR on growth, it has been 16% revenue growth over 10 years. And if you look at our profit growth over those same 10 years, it's 18%. So when you look at those two numbers, you can see for a long period of time, Metro Brands has sustained some very strong growth, but more importantly, very profitable growth. This quarter is nothing but a reflection of that trend. Now, what drove this the sales in this quarter were, of course, most of our stores were back operational again by the time we got through September. There was also festive seasons that we hit. There was also wedding seasons that we hit that were delayed for a number of times, right? We have every reason to believe, barring any other COVID closures or COVID impact, that we should be able to continue our momentum in sales simply because we've built a very strong organization with a lot of operational rigor and financial discipline to it.
Okay, talk to us about the Flip-Flop partnership recently announced, how that also helps to boost some of the plans you may have, with further offerings, where all you intend to perhaps supply some of these products.
Sure. So just as a recap, we opened up 65 stores this year already, right? That's through the pandemic year. So that's quite an achievement in itself. The Flip-Flop opportunity is kind of unique to us in the sense that it gives us distribution rights throughout multiple channels in India. So the first one, obviously, is exclusive brand stores that we will open and operate for Flip-Flop in the coming future. The second one is selling Flip-Flop in our own multi-brand stores of Metro and Mochi, right? So we have that opportunity to sell in our own stores. The third is we will actually be distributing the products to our competitors. And that sounds a little strange, but we are here as brand stewards for Flip-Flop. So we will do that and make sure that our competitors have a good range and presentation. And as importantly, we also have access to the e-com channels in this space. So what that allows us to do is fully capitalize on the power of the Flip-Flop brand in India in the different channels, but not only capitalize on it, but also sets us up to be able to grow it and for it to become a good part of our portfolio.
Okay.
And the other strategies that we have is to continue to look for international brands to bring into India or to take over in India that we believe can be accelerated or done better.
Okay, and in terms of pricing, in terms of regions, share with us some consumer insights. What's working at this point? Some of the market voices loosely refer to Metro Brands as a luxury footwear brand. But I know, of course, you have offerings across the spectrum. Share with us what's really working.
Yeah, well, first of all, I think I wouldn't call it quite luxury, but I would call it definitely, affordable and aspirational product, right? It has both. It has a premiumness to it, but we're very cognizant of the market and try to make sure that it is affordable. So that's number one. When we look at the categories that are selling, it's no surprise that during COVID and post-COVID, we've seen a huge growth in the casual segment of the business that we've been able to capitalize, not only with our own brands, the brands that we distribute in our stores like Crocs, but also multiple other brands like Skechers and Adidas that we brought in to fill that casual gap in the Metro range. We continue to see, surprisingly, some strength in formal, which is really counterintuitive on that piece of the business. But formal is holding its own, and we, of course, we've seen huge growth in our festive season and also in our wedding collections. And then underpinning all of this is, e-commerce has now evolved to become a channel of an and proposition rather than an or proposition. It used to be cannibalistic and discount led. Now we've got to where with omni-channel and our own .com sites, we're able to leverage omni as an additional to our business, our e-com sales as an increment to our business, as opposed to be a replacement or cannibalization of our business. So we see a lot of good forces happening, along with the fact that we have 4 distinctly different tiers of stores: Metro, Mochi, Walkway, and Crocs. And we're seeing traction in all of them in all tiers of geography. So that is very exciting for us to see as we look to the future, that we see the strength coming not from a one-trick pony. That if that pony shuts off, our business goes. We see it actually coming from a lot of different sectors, segments, and assortments of product.
So do you think perhaps, Mr. Joseph, the market's not fully factoring in the kind of growth that you are possibly going to see from revenue streams like e-commerce?
So I think our history speaks for itself. Our financial discipline speaks for itself. Even through COVID times, we were one of the few companies to post a positive PAT, right? So when you look at those factors, we would like to believe that we would be evaluated and recommended on the way we've performed for the last 10 years, our discipline, our organizational rigor, our structures that we have in place, the professional management team that runs the operation. I would like to believe that all these factors are what's important for the growth and the future of the company.
And what about margins? Do you see further improvement? You're already seeing a pretty decent margin trajectory, but how will that improve going forward?
Yeah, so we did see probably one of our highest gross margins this quarter in the history of Metro Brands. We don't know if that's totally sustainable. Well, it is a little bit of a fictitious number because Q3 is not the EOSS month. When we use the EOSS sales, which happens in Q4, to liquidate our old product, right? So, but the one thing we have seen also is that our sales of brands, our owned brands, went up by 300 basis points from 70% to 73%. And of course, we enjoy good margins on our own home brands. So that has helped, but we also see it being equalized as it comes through. But the bottom line is, for the year, we anticipate that these margin trends of being better than ever before or better than we've had will definitely continue, and we have that financial rigor. Of course, we have some headwinds out there that come with the COVID situation, that it's unpredictable what happens there. But I also believe that we've been able to mitigate some of our inventory issues and price increases by supply chain issues, by making sure we have done enough forward-looking stock purchases, so we'll be equipped to take advantage of the sales that come. All this, along with cost-saving measures that we put into place, definitely starts to flow through to the bottom line. So you have gross margins improving, you have cost measures kicking in. It's a good combination.
Now, I know you talked about multiple revenue streams, but I'm also trying to get a sense of the kind of growth you're seeing across each segment. While perhaps offline stores had slowed down in the middle during COVID, you have shown overall growth and in fact open new stores. But if one were to kind of do a comparison between the kind of uptick you're seeing across e-commerce vis-a-vis offline, how would you put it into perspective for us?
We've seen high double-digit growth, which is a continuation of what we've seen in e-commerce coming through. We are seeing footfalls getting better, but also we're seeing our average ticket price go up, our basket size go up. So there's a lot of multiple factors happening. E-commerce has grown 114% in the last 9 months and become a double-digit business for us.
And what about, again, acceleration and growth across non-metros, tier 2, tier 3 even? Where are you seeing that?
So what we're starting to see now, if you look at growth over last year or growth over how we're penetrated, our penetration in the north is slowly increasing. Whereas the south used to be the dominant penetration for us, the north has improved as a percent of our business, and on the east. But that's to be expected, Alba, because our penetrations there were, not as strong as there are in the west and the south. So, but we are seeing solid growth come out of there. And I also believe we're seeing that growth because our assortments are getting better for the consumer in those markets. Okay. And we're catering better to our consumers regionally.
All right, Mr. Joseph, thanks so much for joining us. Good to see all your plans on track at Metro Brands. And we look forward to interacting with you more here on Business Today.
Thank you, Alba. It's a pleasure interacting with you, and we look forward to many more of the same.
If you like the video, do like, comment, share and subscribe.